Welcome, everybody. This is called a statistical trade review. You've not seen me do one like this. This is like a real, in a sense, kind of a training session. I've encouraged the seminar program members to be here. It's almost kind of, part of the training in a sense. And I've opened the door to everybody because, as I've told you before, I want to, get all the information I can across to all of you, even the people that are if you're invited here, you're what I call a member at DTS. You're a free member. You sign up, you get invites, you get these presentations. I send some emails once in a while. There's a bigger group of people that have never decided to sign up to be members, but they still respond to emails and that kind of stuff. And then, of course, there's subscribers to DTS. There's people who are actually in the seminar program or subscribe to one of the letters of the trading room. So I've opened this up to all the members, which is a big group, because again, I've told you that I want to try and get across to you all the free information that I can. The one thing you won't get for free actually is the actual seminar program, because that's something you do have to pay for, and it's something you should not pay for or begin to learn until you have the time and the mental attitude to actually learn how to do this. Don't jump in unnecessarily. So this is going to be kind of a real training session, and I'm a little unsure how it's going to go. I mean, I know how it's going to go as far as the training part, but as I was doing this and setting this up, I'll explain what I mean. I had a lot of thoughts going through my head, a lot of stuff I used to talk about, things I kind of get mad at people about when they're trying to learn this and they, for the lack of a better word, are just lazy sometimes. So I may steer off on that tangent for a while. I actually put a slide in here at the last minute to remind me to do that. I also may just do another presentation next week. I think I have something set up without a title, or if not, I'll set something up for next week. Maybe I'm just going to call it Paul Yells at Everybody, or I don't know what I'm going to call it, but we'll see how much carries over to next week. But there's going to be, I think, some good things for some of you that haven't been through something like this before. And let's kind of get right to it here, and I'll explain as I go. Statistical trade review. Whether you're trading long-term or short-term, it doesn't matter. This will be a review of my recent day trades. And this is going back. This took a little while to do, so this is the last 2 full weeks. I want to get enough trades in there to make it kind of worthwhile. I also was doing this as additional work, so to speak. I'll explain. So there was a limit to how much time I was going to put into it. This is done directly from Paul's personal analysis sheet. This sheet is ancient, but it gets the job done. This process is one of the top 2 things you can do to improve. The process is important whether you do, nice spelling, do this with paper and pencil or on a computer. And when I'm talking about doing what, it's this right here, what we're looking at. These to me are the 2 most important things that there ever will be really in terms of self-improvement if you're into trading. And again, when I say trading, short-term trading, long-term trading, investing, all the same thing to me. To me, it's, we handle charts the same way, whether you're looking at a 5-minute chart or a weekly chart, it's all the same concept. Nothing really changes at all. There are 2 things that are critically important. Now, this assumes that we are talking to somebody who has taken and acquired all of the technical knowledge that they need, meaning you've been through my seminar program or you have gotten an education. I'm not the only one in the world that can do that. If you have an education that you're making money from somewhere else, that's great. I'm not here to sell you that. I'm just simply here to say that it starts with understanding charts first. If you don't understand charts first, this is all a ridiculous step because there's nothing to talk about. But once you begin trading, the first step is called trade follow-up, and this involves the process of printing charts very simply, to see if you're doing what you're supposed to be doing. There's no better way to put that. The most common mistake, and this is not what tonight is about, by the way, so if you're bored with that topic, that's not what tonight is about, but it is the first step. And what that step is, very simply, is that once you know what you're doing and you understand technical analysis, and most people don't even know what I mean by understanding technical analysis. I'm talking about a level beyond which most of you are relating to right now. I'm talking about being able to look at charts and focus on exactly what it is you want to do and be able to tell at the end of the day if you just totally screwed up what you're supposed to do or not. And what most people do is if they do take the time to learn and understand technical analysis, the biggest first mistake people make is that they learn all this great stuff and let's talk about it as a day trader. It applies to swing trading too, or long-term trading. But they learn all of this great stuff, all these technical concepts. They have it all in their head. They scan. They look for different trades. They have all these things set up to do. So they sit down at the chair. The bell rings at 9:30, and what happens to them? I'm going to make you guys participate. Or what happens to them? You guys all know because it's happened to every. It happened to me. It's happened to every one of you. What happens? No matter how smart you are, no matter what you do, no matter how much you prepare, you sit down at 9:30, and what do? Forget your plan. You're a very polite person the way you talk. You turn into a bumbling idiot is what you do, right? And at the end of the day, I can literally remember reviewing at the end of the day. Well, I still do it once in a while now, but I can remember a long time ago where I reviewed my trades and I actually swore that I didn't do it. I literally wanted to call up the broker and say, this didn't happen. Somebody hacked my account. There's no way I could have possibly done that, right? You ever had that? Has anybody ever experienced that? Where you literally can't believe you did it. You're just like, what in the world was I thinking? This is not only not part of my plan, it's just plainly stupid, right? And I don't mean because you have a losing trade. You're supposed to have losing trades. You can't trade without having losing trades. Don't ever let anybody tell you they don't have losing trades. Everyone has losing trades. They're necessary. They're part of the fuel you need to continue to have winning trades. But this is the first step that you have to stop that. You have to. And most people don't even bother to really do this. They just go day after day doing stuff they're not supposed to be doing and don't even know that they're not doing what they're supposed to be doing. So that's the first step, and that's just a basic thing. That's simply doing what you're supposed to do. But then the second problem comes in, which is this, is that maybe what you're doing isn't very smart, right? Because that's step two. I mean, just because you're doing what you want to do, you're only going to make money if what you want to do makes sense. In other words, how good are you at technical analysis? How good are you at making money? If you're good, you have to do what you're supposed to do. But if you're not good, doing what you're supposed to do just means you're following a plan that's going to lose you money. So that's what we're talking about today is step two. How do we help come in and improve what we're doing? Well, one thing that we do is, if you are a seminar student with me, is that you review your trades, you make sure you're doing what you're supposed to be doing, you review your plan, you try and figure out what it is. When you just have to scratch your head and say, you know what, I'm doing what I'm supposed to be doing. I think I'm following what I want to do. I think it makes sense according to what Paul teaches, but it's not making money. You send it to me. That's what I'm here for. I'm your coach, your mentor. You send it to me. I want you to do that if you're part of the seminar program. Even if you're not, you can send it. I mean, we're not going to have the same discussion, but and that's what you have to do. For somebody to look over your shoulder and say, hey, you know what, you think you're doing that transition A secondary sign of strength on a zoomed down pattern, but you're not. Here's what's wrong. Because even in the room, I have some people that I think are really getting to be pretty good, but every once in a while I'll know, you know what, look at your picture of power here. It's totally wrong. I mean, you're bearish here and you're trying to go bullish. So it's very important that you get that review. But a lot of you aren't in a seminar program, or a lot of you are trading maybe okay, or maybe you're not trading okay. This is what tonight is about. It's called a statistical review. To me, I learned so much stuff from this when I started trading. It's absolutely unbelievable. I could spend 5 minutes just sitting here and maybe just saying it over and over again. I learned so much from this. It's absolutely unbelievable. I'm here tonight to show you this just for your benefit. There's nothing here I'm trying to prove to you. There's nothing here I'm trying to sell you. I'm just simply showing you this is, to me, the most important thing you can do. After step one, which is learn technical analysis, and after step two, which is this one, to make sure you know what you're doing. So is everybody with me here? Statistical analysis to see if what you're doing makes sense. Boy, I made a lot of typos. I have to forgive me. There's some typos in here. This really, I got really behind throwing this sheet together that you're going to see in a minute. Okay. So I was a little pressed on this. As a matter of fact, I normally take a little walk before this so I get all my thoughts straight, and I didn't do that today. So if I sound like a rambling mess, just forgive me. So this is what we're about. And I think I put, but first, no. Note the keyword development. Initially, all it is about learning, then really learning. Initially, it's all about learning, and then really learning. And again, what I mean by that is, your first run through understanding technical analysis, you will not learn the detail to make money. You're just going to get a cursory pass through it. You're going to get enough concepts to kind of know what's going on. You're going to know just enough to lose money slowly, and you do have to get beyond that at some point. But this helps you then fine-tune, and then you have to fine-tune and develop your style. And then when you're at this point, then we really start zooming in and start looking at some statistics that can maybe help you. I am not going to yell at anybody just yet. So here we go. Now let me explain what we're looking at here. This is my sheet. This is an Excel sheet. I made this, I hate to say it, 19 years ago. 19 years ago. Most of you probably know this. I was not a person from the market when I started 20 years ago. I knew nothing about the stock market whatsoever. Zero. I was just your average person who thought he was pretty smart, could figure this out. I decided very shortly into this. Now, I don't know if most of you don't go back that far, but back when I started learning, there was none of the information out there that there is today. I sat in a chat room that had no sound. There were a couple of people that would type a comment every 10 or 15 minutes. A couple of trades would come up, there's no explanation. Follow them if you wanted to, you didn't follow them. I took a seminar that I would consider to be, by today's standards, ancient, antiquated, skeletal in terms of the actual information needed to actually make money. Nevertheless, it's the most important thing I could have ever done, because without that, it wouldn't put you on the right footsteps to doing what you have to do. Was I a genius after I took the seminar? I actually got a little worse. I was actually doing kind of okay in the chat room and figuring things out. I got a little worse. I took a step back. But I was a weird person. I had a decent first year trading. I'm not quite sure how. But that seminar process was important, because without that, there's no structure. You don't know what you're doing. And what I took upon myself was, I figured shortly into this that I'm a kind of a big numbers person, and I wanted to start tracking what I was doing, to just figure out what I'm doing. I made this sheet. I just made it from scratch. It developed. I just took on an Excel sheet. I was not an Excel expert. I'm not a computer expert. I know what Excel is, and type here equals this plus this, and I started doing that, and it started out pretty crude, and I kept improving it, and over 3-4 years, I just kept changing little things and playing with it, and became better at Excel, and just created this. My point being is that it doesn't matter if you want to do this on a piece of notebook paper and a pencil, if you want to create your own sheet, if you want to go buy a sheet, doesn't matter what you do. The point is, do something. I get very frustrated with people. Now, when I say frustrated with people, understand the categories of people. There's people that are just here looking around, thinking maybe they're going to do this someday. You're fine, because you're just kicking the tires. And there's some people that I guess at least they think they know what they're doing, and they're trying to get some extra pointers. If you're making money, great, congratulations to you. But then there's people who are really trying to learn this, and they refuse to ever commit to do anything. They're lazy, for lack of a better term. They don't track this. Why don't they track it? Well, I don't have a sheet. I don't know how to use Excel. It takes too long with the paper and pencil. I don't want to buy one. And they just don't do it for those reasons. I hear this stuff all the time. I don't really want to ask you guys and quiz you. I know just historically that about 7, 8, 10% of you actually do something like this, where you track this stuff and try and learn something from it. I've seen some of you have tracking sheets that you use. You sent them to me. Congratulations. And then there's a lot of people who just never look back at their trades, and they just hope that they're going to get better the next day through the process of osmosis. So what I'm going to do is, this sheet, you're seeing the whole sheet here. Can you see my arrow? Where's my arrow? There we go. Okay. So you're seeing the whole sheet here, and this is a Monday. You don't see the tabs down there, but that's okay. There's tabs down below that say Monday, Tuesday, Wednesday, Thursday, Friday, total, strategies, analysis, graphs, all this stuff down there. So this is Monday, and this is the 15th. So this is going back 2 weeks ago. And all there is here are the trades we're entering. Starting here is just a stock symbol. Now, I just want to give you a quick rundown of one day. We're not going to run through every day. I just want to give you a rundown of the information we're going to pull out of this sheet. Okay. Yeah, Glenn. And again, on the site, I have a sheet I recommend to people. I'll get into that later. It's not the purpose of this. I don't make anything from the sheet. I don't want to. It's cheap. It's $100, $200, wherever it is. But I don't want to. The point here is not how do you make an Excel sheet. The point is, what can you learn from doing this? And again, that's why I said I don't care if you buy a sheet, if you use a notebook, paper, and pencil, if you just create your own, whatever you do. But you have to do something more than just download the stuff from a broker. So I just want to show you in here. Now there's some. This is the stock. Well, here's where you enter stuff. The dark gray stuff is where I set up you enter stuff, and then this is all calculated stuff. So you enter stuff, and then all calculated stuff through here. So let me just kind of zoom in on this whoops, I'm sorry, I was pointing at the wrong thing. Dark gray is where you enter stuff. So these are all trades, and there's room here for 27 trades, which of course you would never have, hopefully. And when I enter these trades, I enter everything as 1 in, 1 out, which means I average whatever entries in if there's more than one and average whatever entries out. So if you had 3 exits, they're just averaged into this to being 1 exit. And let me take and zoom in on this area here. But this is where you enter your trades. This gives you your trade summary. And then through here, there'll be some statistics. So let me just first of all just zoom in. I'm going to zoom in a couple of notches here so you can just see a little better. Let me zoom in one more time. So this is just simply, and again, if you set it up right, you can copy and paste this from your broker sheet, or you can develop it around your broker sheet if you're doing it. I think some of the fancier sheets let you import the stuff. I really don't know. Well, that's what I'm going to get to. So this is the stock symbol. This is the shares. Now, I want you to understand a couple things, first of all, as I go through this. I don't do this sheet anymore. This is my sheet I used for years and years. I don't do this sheet anymore. Okay, I do pull it out and use it if I feel I'm having trouble of some kind. If I just can't get my hands on what's going on, I'll go back and fill it in and use it for a couple of 3 weeks. I did this just for you guys tonight. Do you understand that? So this is not. I filled this in just for you. So this is not actually in use by me now. I used it for a decade or more, and then I just, at some point, the benefit you get from it is less than the time you put into it, so I stopped. That's all there is to it. It takes a long while to get there, so I think you ought to use it for a long time. So I went in and filled this out based on my trades from the last 2 weeks, which the numbers being used are right out of the trading room sheet. For the most part, I posted, just stay consistent with that. And it's based on a $500 risk in here, okay? So with that, what I did was, in order to make this kind of balance with what the trading room sheet says, I back figured the share size. You would normally never short 1724, right? You'd round it off. It'd be 1700, 1800, right? That's what you would really do. That's what I really do. But to make everything make sense so that these numbers don't come off different than what I did in the room, and somebody says, why is that more or less? I just made it exact, which you would never do. Everybody got that also? I'm just trying to clear up some questions if you're looking why that looks funny to me, right? You would never do odd lot shares like that. You do to the even 100, whatever it is. And then your entry price and your exit price. Again, those are average in, average out. So 3 exits, if it's all average into 1. And then I put the time in there. And I only put the time there for my reference. There's no specific reason, or that's not calculated in anything. And then there's the gross amount here. And for every trade, I've just thrown in a blanket $5 commission, because some will come out more, some will come out less, depending on how many entries and exits. And then there's, at the end of the day, there's just an adjustment column, and you put in, you compare to your broker, and if it's off $12, you just put in $12 to, add or subtract from the commissions. And this just here's an estimate, so you know what you're doing throughout the day as you're going. So, and then the net after commissions. And if we go over here, then there's the total day gain, gross, blah, blah, blah. And that's all there. Now over here, these first 3 columns, this first one here is for source. So this S is for source, T is for time, and STR is for strategy. And these are some of the key things in here. This is really important. So the rest of this crap is on your broker sheet. You don't need it, right? You know what you made for the day. But this is where it gets more important to me. So here's 3 of the things: source, time, and strategy. Now, obviously, I know what those numbers mean in my head, but when you create this, I'm going to go to the original page here. I'm going to click over a tab, and then we're going to go down a little bit. I actually wrote instructions. At one point, I was going to maybe put this out there, but so I actually wrote instructions, which I'm glad I did, because after not using it in a while, I almost forgot how to use it. So here are the strategies. Now, I number code these so that I can summarize them. In other words, I can pull statistics. Let's talk about that for a minute. A lot of people like to use like a diary or a trading log. Okay, I don't have a problem with that if you want to do that. But I don't think that replaces this. Because what's the problem with the trading log? And I'm talking about, a lot of people advocate having, I took this trade and I'm not even sure what to write exactly. It was perfect according to my plan. But then I overmanaged it because I was looking out the window. And I mean, what's the problem with having a sheet that is a diary feeling sheet instead of a hard analytical sheet? What is the problem with that? Again, I'm not knocking it if you like using it, but there is a huge problem where that can't be the only thing you do. Well, I don't think that's meant to be objective, but there is a problem. I mean, at the end of the week, think at the end of the week, what do you do with it? Right, Chuck, you can't average it. You can't summarize it. You can't say at the end of the week. All you can do is go back and read it, right? You can't pull summarized data at the end of the month. So it makes it kind of worthless. So I code the stats here. So what you would do then is, I mean, like if you were to use this sheet, you would put in what your strategies are. I have here called a mattress with the B, the tail, a mattress with a secondary sign of strength or weakness, major support, major resistance. And again, these are not distinguishing long or short. So in other words, a mattress with the B, the tail could be long or short. It's not distinguishing long or short here. The strategies are, by strategical. Major support, major resistance, DTSL setup with secondary sign of strength and weakness, and the same thing with the tail. A gap strategy, I just call it gap in one category. A power trend or pre-climactic, other, and then wildcard. Okay. And then mistakes. If your strategy, you felt instead of having a valid strategy, when you went to put in the strategy, you determined, man, this is a stupid trade. Well, then you have mistakes. Now, again, if you think like a person who would write a diary, you'd probably want to write out your mistake every time. But you know what? How many different mistakes are there, everybody? How many different mistakes could you possibly do wrong in the course of a year in terms of category? I mean, 5, 2, 6? Well, no, not in categories. You can make infinite mistakes, but I mean in terms of categories, right? You blew through your stop. You didn't manage according to your plan. You didn't have a strategy, right? So I've listed here what I feel is I only can come up with 7 mistakes that you could make, period. Anybody in the world. There's only 7 categories of stuff to me. But again, this is a personal sheet. You can put whatever you want in there. You could put my dog was bothering me at the time that I took the trade, or whatever a common mistake is for you. But again, the purpose is to categorize these, right? So at the end of the week, you can have a summary of what happened. Then the source of the trade. Now, your sources may be different. Now, I put my daily scans, my hourly scans, gap list, gap carry list, and room member or scanner as one category because it's a much smaller category. You may have stuff like trading room suggestion, newsletter I get. My friend Dave called me up. Wherever it is you get your source of trades, or for my own personal scanning last night, or for my scanning this morning, whatever it is. But wherever your trades come from, they come from somewhere, right? You're not just sitting there on your desk and the symbol Microsoft just drops on your keyboard. I mean, somewhere you were watching Microsoft for some reason, whatever it was. And if not, then you probably have bigger problems than what we're talking about, right? What is mistake number 26? Mismanaged chicken. Chicken S. Chicken poop management. You just didn't follow your plan and wimped out because you were getting chicken. And again, a lot of the stuff, it's personal to you. Like I put something down, I know what it means. If you picked up this sheet, you may not know what it means. You may want to change it, whatever. So these are those codes, strats, mistakes, source, and then time. Let me go back now to. I'm sorry, I keep pointing. I'm pointing somewhere where you're not seeing me point. Now you can see me. Sorry about that. So, and then the only one that wasn't explained there was the T is time. For time, let me just flip over to the weekly summary real quick. Here's the time of day codes. 1, 2, 3, 4, 5. 1 is open till 10 o'clock, time you entered the trade. 2 is 10 to 11:30. 3 is 11:30 to 1:30. 4, 1:30 to 3. 5, 3 to close. Now, is that what you should do? I don't know. I don't care. Again, I'm not telling you what you track or what you do. I just want to show you the value of what this sheet can show you, or any sheet like this. So that's time of day. I also put when I get to market rating, I put a market rating in there. And again, how do you rate the market? A lot of people ask me this because when they're doing a sheet like this, they're trying to figure out how to rate the market. This is in my head how I do it because to me, this is how strategically I think about the day. It could be a reversal day to the upside. So it's a day where we've been falling or we've been going sideways and the market reverses to the upside. It could be a continuing uptrend. In other words, we've just been going up every day. It's another up day in a series of up days. It could be a sideways day. And again, this is the after effect analysis. You look back at the chart and you say, what did the market do today? Continuing downtrend day or a reversal to the downside or channeling day. So to me, those are the 5 categories of days. How is this useful? Well, it's useful in that if you have a down day in a continuing series of down days, and you took 5 trades and 4 of them are long trades, you better have made money on those long trades. I'm not saying it's wrong per se, and that's one of the things about the sheet is that for anything, it's statistics. If you have a down day and you take long trades, that's not wrong per se. According to your plan, you could be playing gaps and unique stuff, and you could have a great day. But my point is, if you are playing long and a down market day and you're losing money, and that's what happens consistently, guess what? That's one of the things the sheet will take and throw and punch in your face. And that's what you need to do. Does that make sense, everybody, what I'm saying here? So it's one of those many things. And again, I'm going to say this at least 6 more times. I can't tell you how much of this type of stuff helped me my first years, because that's the type of stuff it'll show you. Which, would you even know that? Could any of you tell me right now what percentage of your trades were shorts last month? What percentage were longs? Did you make more money long or short? Could you give me a general overview on market bearish days? What percentage of your trades were you short? You starting to get a feel for what I'm talking about? This is the type of stuff that really helps you, because if you suddenly realize, hey, you know what, market's been down 4 days in a row, I have 80% long trades and I'm losing my butt, guess what? You don't have to look very far to figure out what you're doing wrong. You're a permeable and you're not following the charts properly. All right, so market rating, time of day, and then the sources, we already talked about that. Okay. We go through, we code this in. So this was source on here was a 4. The time of day was 1 before 10 o'clock. Strategy was number 1. Boom, 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 boom. All right, so let's scroll over here. And what do we have? There's not much. So then over here, it gives you a little summary of the day, which is not terribly helpful. Looking at one day summary is not terribly helpful. But the mattress with the B, the tail, strategy was the number 1 winner. Mattress, be the tail, strategy, number 2 winner. Time of day, most of the money was made with trades taken before 10 o'clock. The rest of the money made between 10 and 11:30. Nothing done after that. Market rating, I gave a 5, meaning it was a narrow, it was a channeling day. Basically, market basically sideways. Now, these two numbers here, you may think this is weird, but again, the sheet was done. I did it for me, for what I think I need or want to do. I wanted to put the number of plays on and type it by hand. Now, obviously, with all the complex calculation going on here being done automatically, obviously I could have Excel count the trades for me. Why is it that that gray area means I'm typing it here? Why is it that I chose to type the number of plays done and the max loss for the day? And that's $13. Why? Excel could easily have done that for me. It'd be one of the simplest calculations on the sheet compared to some of the rest of the garbage on here. I don't remember how I did most of this, to be honest with you. Right, Glenn, exactly. I want to are the rest of you here? Is anybody here but Glenn? And Glenn's probably the one that needs this the least out of everybody. But exactly, I wanted to, you have to stick your face in some of this stuff. I mean, most people want to go to the bar when they're done trading, forget what they did, and come back the next day and hope by osmosis everything changes. I want to stick my face in the stuff that I think is an issue. Overtrading's a problem, always, for everybody. And I wanted to, have to go and type, count the trades. And, it's funny. You count the trades and you go, sometimes you just go, damn it. Why did I take 7 trades today? The last 2 were losers. What am I doing? And it gets you really, really mad. And that's how you change. Maximum loss. Again, if you ever have a day where you go beyond what you're supposed to do, I want to just have to type that in there and go, man, here's the main part of the sheet. So we'll go to, go to Tuesday. Trades in here. There are more trades this day. Lost a little bit on Tuesday. Everything's coded in here. And again, we're not going to run through every. The point is, it just to give you an idea and then get to the summary page here. Wednesday, what did I put? I put 5. Market rating 5. Trades done 6. I like to come in 4. 5. If I'm more than 4 or 5, I better be making money. It's not because I'm trying to back. This was a nice day. There were a couple more trades I normally would like, but it was just building on a profitable day, so it was good. The last trade was still done at 11 o'clock, so I was done by, mid-morning, which is what I like to be most of the time, unless there's something special going on. What else? And that was it. When I count the trades, if I have 2 similar trades back-to-back that are really a replay, I'll just count it as 1 trade. Sometimes I'll do it, get out cheap, redo it. I just consider that 1 trade in my head because it's just a redo, so to speak. So here's Thursday. Did okay on Thursday. 4 or 5 trades. Friday. Friday was a holiday. That was holiday Friday. So here's the totals page. Can you see it? Yeah, you can see everything on here. Matter of fact, I could even zoom in a little bit more. You'd still see everything, right? All right. Can you see it okay if I leave it like this? You can zoom in good enough? It's just a concept. You don't even have to necessarily read everything. But so then here's the weekly summary. Again, you're not seeing that there's little tabs at the bottom. I didn't include it in the camera shot, but there's just little tabs, and this one's the total. So this is just adding up the whole week, and this is where you start to get to some good information. Now, obviously, again, I want to remind you, when you're doing this, looking at a weekly summary is nice, but what's the big caution, everybody? What's the big caution looking at a weekly summary? What's the big caution? You're doing statistical analysis. What's the caution looking at a weekly summary? What do you have to be careful about? This is something that people do sometimes. Well, kind of the opposite. I mean, when you're looking at statistical stuff, I mean, you need a certain number of things you're averaging to make it worthwhile. In other words, 1 week's worth of trading is not something you should base a change on. You understand what I mean? Now, it can, limited data, right? Now, it can bring to focus something that you just clearly see, wow, that's wrong, right? So even after a week, like for example, if your market rating, here's some stuff here. Like here's Monday through Friday. Here's this little summary. This is just a little summary of the key points of each day. Why is it there? I don't know. I felt like putting it there a long time ago, and I did. So there's a profit for the day. Market rating. Now here's where you can kind of tell your market rating. Is your market rating have any correlation to your profit and loss, right? Number of plays done, maximum loss. I don't have this there's a good reason I didn't do that here, but the R thing doesn't work there. Oh no, I never implemented that. It was a column I put in, I never implemented. And Sharpe ratio, I'm not sure. Oh, Monday there were no losers, I guess, so it didn't. Another little point, and see, it's some of the stuff I didn't even think about to say. I think again, if you do this yourself, or if you get a sheet that lets you adjust it, I consider anything typically within, I forget what my sheet uses, but I think anything within 1/5 of an R, I consider to be break even. Because it's kind of stupid to have your batting average numbers and your Sharpe ratio numbers be changing on what's essentially a break-even trade. In other words, break-even means more than zero to me. It means zero plus or minus. If you're risking, say, $500, 0 plus or minus 50 or $100 is break-even to me. So I like to set it up like that. And that's why if you're looking here, Monday there was a small loser, but it was so small it was not considered a trade for this calculation, and therefore there was no Sharpe ratio because it's infinite. So and here's your Sharpe ratio. So and here's your end of the week. So here's Sharpe ratio end of the week 1.48, success ratio, in other words, batting average 59%. Those are good numbers. Those are real good numbers. That's great. 60%, 1.48. Over here then we have time of day, money made, open till 10 o'clock, the opening half hour, $800. Prime time, 10 to 11:30. Now this is where what I started to say was, like, if you have your market rating here, and if you, like on, let's say, down days, you're getting killed, and you notice that correlation, you may be able to pick up information just after a week to say, look, I don't need to see 100 weeks of trading. Market's falling, I'm going long falling stocks, this is a mistake, and you change it. But some of this other stuff you don't necessarily want to change. In other words, just because 11:30 to 1:30 I had a loss, that doesn't mean next week, I got to stop trading that time. Does that make sense, everybody? Now, maybe after 3 months, if that is an average loss, then maybe I missed something. Okay, wait a minute, what am I doing here, right? I mean, statistically, after many, many days, I'm losing money from 11:30 to 1:30. Why am I sitting there? Does that make sense, everybody? So you have to use your common sense when statistics become significant enough to react to them, and when it's just common sense to change. Long versus short. Long, flat. Lost $50 going long. All the money made short. Check that's a statistical check. It means I misentered something in terms of the strategies or something, but I didn't care about that for today. And what else do we have on here then? This page, that's about it, right? I'm not sure why the source isn't coming through though. I didn't bother to check this stuff really. Next page is strategies. So here's a strategical breakdown. My number one, and again, these aren't rated by popularity, but the first one listed here, mattress, about be the tail, lost $6. Mattress, secondary sign strength weakness, made 780. Major support, major resistance, DSS, secondary sign strength, made 700. Biggest one were gap plays. This one lost $200. Total balances out. Boom. I didn't put any mistakes in here. I did in the next week just to stop trading on two. Yeah, there's another thing too, your day-by-day breakdown. And that's another good point, is that after 1 week, it doesn't really matter. But here's some stuff I pulled out of this. Way back when, I realized not to trade Monday morning. After many weeks, I was losing on Mondays. And when I looked at the sheet, I was losing on Mondays the first hour or two of the day. So after many, many times doing that, I at least became very sensitive to the fact that Monday mornings are not always. Now, this is a long time ago. Not really true for me anymore. Strategies change, market change, you change how you trade a little bit, and it can flip around. Mondays have been okay. But for a while, that was something that I, considered. I also had a category which was playing and this is a long time ago, but the category was playing a daily chart on an intraday basis. In other words, taking a daily buy setup and playing it intraday. And I noticed that anytime I had a morning entry in terms of the time of day, coupled with that strategy, it was losing. And what was happening was there would be daily charts that would run up in the morning. I'd get in, and they would collapse in the afternoon. They may have still been good swing trades, but as day trades, I wasn't playing them right, and I was losing money on those, something that I realized from this sheet. Never would have figured that out. I mean, all the stuff you think you should figure out when you see it happen, but you don't. You take a trade. Most of the time we say, well, gee, that was a good trade. It just didn't work. Or you just get mad and, throw your computer out the window. But we don't really go and fix this stuff. And that's what this does in a very, very systematic way. The only thing I'm not sure why these didn't come through. Here should be a breakdown of the money made from each of those categories. And go to week 2, and this is the other week of 422. Tuesday, Wednesday, Thursday, Friday. Let's just get to the totals page here. So this week, 2,500, not quite as good as the prior week. On this week, Wednesday was the only losing day, not Tuesday. So forget my strategy of not trading on Monday. Here I put on Friday, I coded the NVIDIA trade as a mistake. You see the strategy column there, 35, 35, 35. I put 22 in there, which is a mistake, just so you can see that transfer across here. So when I get to the strategies page, 22, late entry. I was playing NVIDIA late day on a Friday, which I never do. Didn't work. Looked like a good trade, but that's why you have a rule not to trade late Fridays, because things don't seem to work for me. So I put that as a mistake. So again, another big thing is to be able to categorize your mistakes at the end of the week, at the end of 2 weeks. And then, of course, you put these total sheets in a book, sum them up, and then you have a grand running total. And if you are having a problem with the mistake showing up, it shows itself. Which mistake is the problem, and it lets you identify which one it is that you need to try to work on to eliminate. So there's the top strategies, top mistakes, boom, boom, boom. So I've been blabbing through this and just giving you a feel for it. But any questions? Feel free with any questions. Let's go back to the reason we're looking at this stuff. The reason we're looking at this is because I think, again, whether you're swing trade, day trade, doesn't matter, that this is, at some point in your career, the most important thing you can do. I wanted to, I talk about it all the time, great, but I wanted to show you firsthand exactly what it is, what it looks like. Now, how do you go about doing this? Well, you have a couple of choices. You can just create your own little sheet. Start off basic. You don't have to do anything crazy. You could import your broker sheet, add some columns to it. You could just get a paper and pencil and track some of the stuff at the end of the day if you wanted to. You can buy a sheet. I have, and again, it's not a big deal, but a former student of mine makes these on the other stuff page. His information is there on the website. And Glenn, you use that, right? That's what you use, right? That's Greg Thurman's stuff, right? Okay, and you like it? I mean, again, it doesn't matter to me. I mean, just if you like it, so it's good. And it costs. The reason I like it, and it costs between $100 and $200, right? So now, keep in mind, I have not surveyed every spreadsheet out there to come out with the perfect one for you guys. That's not my job. You can do that. Doug was a former student of mine. He loves me. He made a great sheet. A lot of it was based on principles that he learned from me, and he's the guy. He's the guy good with Excel and database and all that stuff. So, I put mine as archaic because it is. My sheet is archaic. It's just a garbage Excel sheet. But it's probably better than what a lot of people set up. But it's not anything close to what you can do with a real database type sheet. So you can also just go get one. It's not a terribly expensive thing. And I know some people lease them year to year. This is just for sale. But not the point of today. I mean, again, I don't care how you do it. But the point is, this is very much a learning thing you need to do. Oh, thanks, Glenn. Okay. This little slide here shows me yelling at everybody. Let me take the last couple minutes. I don't see any questions. The 7 mistakes, sure. Why you want to learn how to you want to learn how to do my 7 mistakes, Sammy? And don't take too much from the specifics. I mean, what you need to put in here is what you need to help you, right? What do you need to help you? And I'm not done yet, so don't anybody go anywhere. How do you think a market rating will switch on core trades, trend, part entry expectations, or change while in trades? Well, Jay, now you still have at the time of entry of a swing or a core trade, your parent time frame, you could use a combination of daily and weekly chart, whatever it is. Maybe you give a double rating, give it a 2-digit rating, one for the daily, one for the weekly, but you would still rate it the same way. And again, that part is not rocket science to me. It's not like it's really, when you're making a trading plan, in other words, Jay, of when to enter a swing trade, that has to be extremely detailed about, this is exactly what you expect from the market and all that kind of stuff and exactly where you'd enter. This is not that. This is not really making a check on your trading plan. It's just a broad concept to say, hey, are you basically going long in downtrending markets, right? That's the goal that I did it for. But again, Jay, if you want to do that, you have to ask yourself the question, well, for what reason am I tracking anything? If you're going to go to the trouble to track something, it should only be because you were going to use it. And that's the reason. Well, when I did the sheet, there were no sheets out there, understand. There was no such thing as a sheet like this. It didn't exist. You couldn't buy one, so I just made it. But today, if you're good with Excel, the advantage of doing it yourself is a big one in that you would put in there what you want to do and what you would want to see, right? Whereas if you're filling out anybody else's sheet, you're doing like a homework assignment and you maybe don't even care about some of the stuff that's in there. But if you're creating the stuff, you have to ask the question, if I'm going to track something, is there a reason I'm tracking? What am I trying to learn from it, right? Stan, that sounds like a good question. I never heard that. Oh, you should have taken it in. That's a good one, Stan. That's really a great point. That is. And it's funny, I haven't heard that question before, nor I've never thought of it, because I don't know, maybe you've heard me say it. You're not in the room with me or anything, but I've said before, Stan, that I get much more upset about missing a trade I should have been in than stopping out a one that didn't work. I get much more upset. Now, again, you have to kind of draw the line between what is a trade you should have been in and just the whole world of woulda, coulda, shouldas. All the time I hear people saying, "Oh, gee, I missed this, I missed that, I missed that." Well, stuff moves all day long, but there are times where yes, that's my number one thing. Like with Twitter the other day, the gap up on Twitter. Number one thing, all over it, wanted to be in it, and I blew it. And yeah, that is something you could track too. Yeah. Because then the key there would be, obviously you don't have statistics on a missed trade in terms of, I don't think it's all that important to track the money you lost per se, but the reason you lost it, I think, is an important one. That would be the whole goal of that, is to eliminate whatever thing is hindering you from getting in the trade you're supposed to get into at the time. That's a good one. Yeah, what I started to say was when I went through and I was doing this for tonight for you guys again, and again I did this just to show you this because I think it's so important. And I started to think about all the stuff I used to do that I just did because I thought it was the thing to do. This trading thing is the absolute best profession you could ever be in. I mean, think about it. You can literally work from 8:30 till 10 o'clock every day, be done 10:30. You could also get up if you wanted to. Another style of trading would have you getting up around 9:30 in the morning, get a cup of coffee, pull up to the chair around 10 and trade from 10 to 11 or 10 to 12. I mean, it is literally the greatest thing in the world. You sit down, you play a video game, and you get paid for it. But yet what amazes me is how little people are willing to invest in becoming someone that can do that. And obviously, I'm talking to a whole group of you. I'm talking to 60, 70 of you. Obviously, it doesn't apply to all of you. There's some people that do take it seriously. But I just come across so many people that just don't want to put any effort at all into any of this. And I ask people, I'm not going to do the whole process with you here because it would be too long and too boring, but I'll ask people sometimes, hey, did you ever work for another company or another person in your career? And everybody will say yes, they have. And I'll ask them if you're ever in a management type position where you were paid salary? Say, yes, I was. You were paid salary, you did not get paid extra to work more. Yes, raise my hand, yes, that's me. And then I ask people, did you ever work 50 hours or more to do a good job and not really get paid for it directly? Everybody says yes. I'll go to 60, I'll go to 70. Everybody has their hand up, right? Everybody? Let me ask you guys, how many of you, how many of you at some point in your life worked for another company and you worked more than 60 hours a week not getting paid for it directly? I know you may get paid indirectly, but right? Everybody. Everybody. Well, everybody in here, if you're interested in trading, you're probably a smart guy and you do that, and that's what people do. But yet, you want to come and be a trader, and somebody asks you to do something that takes 30 minutes a day. Oh, no. That's way too much time. To pay for a seminar, sit through a seminar 3 times, that's 3 weekends. 3 weekends for a whole new career? Oh, no, that's way too much to expect from me. Right? I mean, this is what gets me frustrated. This is so learnable. It is learnable, but not the way most people go about it, you know? Listen to an online video, take 1 weekend class, think you're going to be a master, never follow up on what you do. Just come in here with just one-tenth the knowledge you need and think you're going to take out everybody in the markets who've been working at it for years. It's a very doable thing, but you have to decide if you want to do it or not. And that's why people, with like people taking seminars, I'm in 2 camps. There's people that I have talked out of taking a seminar. I think one of them's here. I think I saw his name. Speak up if you are. There's a couple of people I've talked out of taking seminars because I didn't feel, just talking to them, that they were ready. And I had somebody who was like, well, I just lost my job and now I want to learn to trade and I have about a month of cash in the bank to live on and I got to learn to trade. And I told this person, no. I mean, haven't you heard me talk before? You can't do it that way. And then people deciding, gee, I only have $10,000. Should I get an education and then only have $5,000 left, or should I just put the $10,000 in an account and blow through it? And they always choose the latter one. Do you know that if you talk to any brokerage firm, if you know somebody or if they get somebody to talk to you, ask them about the success rate for Forex and futures accounts under $5,000. Do you know what it is? There's people that open accounts under $5,000 to trade futures and Forex, which is a common thing. And by the way, it may not be a bad thing. You want to learn, Right, it's 97% blowout rate within 3 months. 97% blowout rate. Just money in, gone, money in, gone, money in, gone. Because these are the people that are, the wannabes for the most part, that are trying to just learn on the cheap. Listen to a few free videos, put 3,000 in an account and think you're going to go trade futures. And the funny thing is that, sometimes you get some success and you think you're a genius, but lasting success only comes from the process of really, really learning and understanding what you're doing. I think I wrote a blurb down about that to remind myself. Yeah, I mean, if you just get the rudimentary knowledge, it's just going to be a couple of steps toward failure. The difference between getting something right and lasting success is, to be able to endure changes, to be able to get through different market environments, to be able to withstand a bad streak and to pull out of it and be okay. You can't do all that. I know a lot of people just, they'll tell me, I just threw some money in this account, boy, I'm having a great time, making a lot of money, and then, a month later you don't hear from them. Oh yeah, well, I had a bad day. and they're done. So my point is just very simply, there's the other side of the people too. There's people that I've talked out of seminars, and then there's a big group of you that I never talk people into seminars. And I have an email here from somebody. I'm not going to read it now because I'm going to be out of time here, but maybe next week I'll read it. But basically saying, he knew me from a long time ago. He just found me a year ago. I had already had DTS open for a while. It took him 3 months to even know that I taught seminars. and he took it. He's thrilled. He's just ecstatic, but he's kind of yelling at me like, you got to push yourself out there more, because if you do want to help some of these people, they're not, you're too laid back about it. And he's right in a sense. If you really want to learn this, if the time is right for you, you have the money. Anybody who has some money and doesn't want to invest a small amount to learn, I think is just foolish. Because it is the first step, whether you know it or not. Because it's just, could you learn on your own through trial and error? Yes, you can learn anything from trial and error. How long would it take you? It would take you years. and thousands of dollars, even if you had limited risk up front, because that's just what it does. So, I mean, why not shortcut? Some, you're still going to have some bumps and grinds, even with an education, but why not get through 90% of those errors up front and go through a program that teaches you exactly what to do, what to look for, so that when you do something wrong, you whack yourself in the head and you go, oh man, that's it. I'm so thrilled with so many of my seminar people that I hear from that are, just doing great stuff and getting in good trades and they're thrilled and they're making money. And I love to hear that. That's what I'm here to do, and makes me real happy right now is to train a bunch of people that really start to understand this. For those of you that are here just kind of kicking the tires or first time hearing me, again, I really encourage you until you're ready to take advantage of the ton of free stuff that you do have available for you at DTS on the website there. Jerry, I'm sorry, I didn't answer your question. Given your vast knowledge and experience, what are the odds any given dedicated student will perform as well as I did? It's a tough question to answer, Jerry, and here's why. And I'm not at all trying to be evasive, but I also don't want to give a false number. As you know, people coming in the market without any kind of education are, destined to lose. I mean, people say it's 90% failure rate. I think it's higher than that. I really don't know. Depends what you call failure and success. Part of it is, Jerry, what do you call success? I mean, at the end of the year, if you're profitable, but you weren't profitable enough to live, or maybe you didn't intend to be profitable, maybe you're trying to make some extra money. What if you made half the money you're supposed to make? I mean, it's harder to find what success is, right? So when you say how many people have come in and dedicated themselves, made it, that's what you mean by making it. I mean, and part of it is I don't know. Like, I don't see people's accounts. I'm not in charge of their accounts. People don't routinely report to me. They're not required to. So somebody could be vastly successful. I've had people that, they come to the room for 6 months and they take seminars and I don't hear from them for a year. And I think, well, gee, I wonder what happened to them. And then they email me one day and say, just want to let you know, Paul, I've been trading. I've been doing great. Thank you so much. And boom, out of nowhere, I get that. So I just don't know, Jerry. I mean, I just don't know. I get the sense that the people that really do this, they're doing well because most everybody who's around I hear from. The thing is, the people that drop off, I just don't know why they dropped off. Sometimes they drop off because they're successful on their own. Sometimes they drop off because they were successful but may not successful enough to quit a job or something. I don't know, but I do know this: it's many, 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 many times higher than would it be trying it on your own. And I guess the bottom line is it's your only chance, I think, in my view, to learn it. So I think there's some people that maybe there's several people that are with me that are retired. And they're just looking to come in the morning and make a couple $100, make $500 a week or something. That's all they're trying to do. And obviously you can do a lot more than that, but I mean, for some people the goal is simple. Just add a little income to what they're doing. And I have some people. I have a guy he's going to leave the room for 3 months because he wants to golf all summer. I guess, I guess he's successful, right? If he's taking off 3 months to golf all summer, I guess he's doing well. I can't give you a stat on it, Jerry, because it just doesn't exist. My sense of it, quite honestly, though, it's very good. I'm very happy, and that's what like I told you, I get a lot of real happiness from really. I am dedicated to just trying to do whatever necessary to make anybody that signs up to be successful, and you know that. And I've held myself out there to say when you take the program, whatever you need, get in a room, go through the trades, whatever it is you need to do. If you can be successful, I'm going to make sure you are. Thanks, guys. Have a good one. I'll talk to you later.